everything that the CBN has done thus far has actually stabilized. I think we're getting to it's more stable than it was at least earlier in the year.
Yes.
And that's kudos to the CBN.
All right, so keeping the rate at 26.5% is a real massive rate for any business to, borrow at. So why do you think they stick to that rate?
A lot of FMCGs do now do like producing in a way that I think is called the sachet economy, yes, if I'm correct, right? Where you're actually now selling things in like smaller quantities, that are accessible, and they might be smaller quantities but still even the same prices as you used to buy them before, because they are trying to protect themselves at the end of the day. But okay, so here are the things that you should be watching out for this week. Some bubbly things are happening in the Southeast, right? Enugu has, within Enugu and the Southeast Development Commission, right, they just launched a $50 million venture fund, right? So you need to watch how they would be deploying this capital. Would they prioritize tech, or infrastructure, right? This is going to be a test of regional development versus venture scale. Welcome to Across Markets by Business 360. If you're in the FMCG sector, you know that the game has changed and is changing. This is no longer about volume. It's about the cost to revenue ratio. We're breaking down why this matters and why some giants are thriving while others are feeling the squeeze. Welcome to Across Markets again by Business 360. My name is Joy Abia, and I'm joined by my lovely co-host,
Vera Ifechuku, your co-host on this space.
All right. Hi, Vera.
Hi, Joy.
How's your day going?
Going great.
Okay.
Yes.
I've been better, but I'm good. All right.
Yeah.
So today we are, of course, starting with the first of the most important things on the segment of the show is the economic pulse. And this is where we give you the most important numbers and news that are relevant to the economy and the African markets, which is important for your business, your money, and, everything in between. So last week on the last episode, we spoke about the things to watch up to look out for, right? And we talked about the 305th CBN Monetary Policy Committee meeting. Okay, and to when you're watching out for like the MPC meeting, you're usually looking out to analysts or like everybody looks out for the rates that they usually give. Okay, so the MPR, which is the monetary policy rate, has remained stable. So before this last meeting, it was at 26.5%, and it still currently stands at that. Okay. Yes. So what other things are we looking at in the economic pulse section, Vera?
All right, so CBN foreign reserves hit $48.89 billion in May, a $551 million jump in just 3 weeks. So does this mean the worst is, over for the Naira, or, we're just there?
So this is a strong signal, I'd say. It's the worst should hopefully be over for the Naira.
Yes.
Right? This, like everything that the CBN has done thus far has actually stabilized. I think we're getting to it's more stable than it was at least earlier in the year.
Yes.
And that's kudos to the CBN. I think we talked about from last week when we talked about the revised FX manual and what it's meant to do for the economy. And the governor of the central bank has, given us some hope as per like these are reforms to help like the continued reform that Nigeria is undergoing. CBN is just going on to do more of its like work on everything that it's been doing. So so the CBS data also confirms that gross external reserves rose, like you just said. And this is an improvement in basically our liquidity position as a country. So basically the external reserves just point to, it's like, like a human, just like you, right, having a savings account that could actually maybe like an emergency fund or a savings account towards something. It's just where you put like extra money that you're not using at the moment. So that's what the foreign or external reserve indicates. So that's what it is for. So it's going from that amount to, close to 49 billion now. It's just saying, we're strong, we're making some money, our FX is relatively stable, and it's a very good signal. So
Okay.
I'd say, right? So, and the position really like the real anchor too is still the MPC, the Monetary Policy Committee, choosing to keep the rate at 26.5% and not
Okay.
changing it, right? Yeah.
So why do you think they stuck to that rate?
So the MPC, according to the Monetary Policy Committee, they are seeing this the current inflation as a transitory, like according to in their words,
Okay.
is transitory. The current inflation is transitory.
All
So
right.
yeah, so even though we are at 15.69%, we were as at April, right? So they're choosing to maintain the higher rates at this point because I think what they're doing is to protect the currency, and basically it's still a long-term move at the end of the day, right? They don't want to exactly touch. So because of how far we have come, we've been giving a lot of positive news. For example, the S&P
Yes, the
rating,
rates.
and some of now there's foreign reserves and a lot of other things doing well. Because of that, I think the CBN is at this place where it's like they don't want to tamper with the stability so far that should I say the current, where this stability that they have fought for thus far. So they maintaining that rate is like saying, okay, we've come a long way, so let's not, maybe if they exactly have to change the rates now, maybe it's gonna maybe affect some of the other things that are in play or that have been in place. So them choosing to leave it, I'm sure it's for the best, but according to them, they're seeing this inflation as transitory, so they're trying to protect a lot of things at where the economy is currently at and where the markets are. So for businesses, it may be a tough choice, it may be a tough thing to still have that same rate as where we are. I mean, it's high and it's higher than the inflation rate. However, let's trust what the CBN is saying.
All right. So keeping the rates at 26.5% is a high stake, and the market pain today is leading to, what's called stability tomorrow. Right. And speaking of stability tomorrow, right. So let's talk about the FMCG. Yeah, we saw that the first quarter of the financial report combined profits of 19 manufacturers to hit 1.24 billion naira. Yes. And we've been hearing and also seeing that it's not just about the real story isn't about profits, but it's about the cost to revenue ratio. So what do you think about that?
I mean, combined, these firms, their cost to revenue ratio dropped from 52.5% to about 46.6%, as I see, from our numbers, right? And while like that's a very significant drop, right? And it means they are fighting for efficiency at this point. Okay, which means that they are spending much less from the revenue that they get, or from the profits that they're getting. They're keeping way more and spending way less in terms of production, right? And Unilever is actually the standard for what we're in this sector, in the FMCG sector, right? And they didn't just grow their revenue by 26%. They proved that if you focus on what is your core, that is like play to win brands, like Knorr, Pepsodent, and the likes, right? You can hold your margins despite the high cost environment.
All right. So, okay. Speaking of the consumer, so for the consumers, does this mean, okay, there's like a lower price?
No, this does not mean lower prices at all. I don't even think we're gonna see much lower prices. However, it's just like the companies would think about themselves first, because of course there are investors there that they need to pay back their money. They need to make money. They have to pay their staff and all of those things. So no, I don't think it does. It's not going to translate to like lower prices. However, they are trying their best not to push like 100% cost on the consumer. So they don't want to make all of the high cost manufacturing environment to reflect into those prices. They're trying their best not to. So they are just protecting their own margins at this point, so that they can keep operating, okay? And rather than just like pushing 100% of the cost to the consumer. So no, it's definitely not going to translate to lower prices. It may translate to, of course, we're just going to keep seeing more efficiency.
Okay.
If there are, a lot of FMCGs now do like producing in a way that was, I think it's called the sachet economy, yes, if I'm correct, right? Where you're actually now selling things in like smaller quantities,
Quantity.
yeah,
Yeah.
that are accessible, and they might be smaller quantities but still even the same prices as you used to buy them
Yeah,
before,
definitely.
because they are
Yes.
trying to protect themselves at the end of the day. But yeah, like Unilever is actually the standard for this, which pushes us to who we're spotlighting today.
Yeah, definitely. We're shining our spotlights on Unilever Nigeria. Yeah, so unlike Cadbury or Nestle, who are struggling with, the top heavy cost structures, Unilever successfully has navigated the post-divestiture transition. Data says here that cost to revenue ratio dropped to 54.99%. They've proven that operational restructuring isn't just corporate jargon. It's the only way to maintain a net profit margin of 11.8% in a high inflation climate. So what do you think about that?
This is definitely a masterclass
Yes.
of doing more with less. Okay, it's a combination of growth and operational discipline. They are We're seeing in the result that they are taking the leaner operations route, where Toby Adeni, that's the MD, managing director of Unilever, he pushed the play to win culture. So all of the things that they have done in the past years, or maybe, yeah, I'll say the past years, because the past years have been sort of like the hardest for Nigeria so far. So what they've done, they aren't just like trying to be everything to everyone. They're choosing they're choosing exactly where to play at. I think they produce no, and I don't want to do a lot of brand comparisons here,
Yeah.
but like they have exactly, just I think they've just identified key markets that they can play at. That's what they've done. Identifying the markets that they are strong at, and they keep playing there and pushing for more returns by doing their strategic thing. So yeah, like they've done pretty well. Kudos to Unilever,
Yeah.
and the MD, who has exactly like motivated this play to win move.
Yeah, and just as you said, it's a masterclass of doing more with less. They are playing their cards well, and they are playing their games well in the industry.
Absolutely. Okay, so here are the things that you should be watching out for this week. First things first. So Enugu, first of all, like just some bubbly things are happening in the southeast, right? Enugu has, within Enugu and the Southeast Development Commission, right? They just launched a $50 million venture fund, right? So you need to watch how they would be deploying this capital. Will they prioritize tech, or infrastructure, right? This is going to be a test of regional development versus venture scale.
All right.
Yeah. What next?
All right. So in East Africa, Kenya's tax environment is getting aggressive. So proposed glass bottle taxes and, shorter filling windows are causing tension with neighbors. That's Tanzania. It's a classic trade versus revenue battle. Watch the fallouts in EAC.
Okay, and another thing, of course, is Moonshot by Tech Cabal. It's a yearly, tech event hosted by Tech Cabal, and on the headline sponsors this year, we're seeing great. Like, I'm really looking forward to see what the tech ecosystem within Lagos, Africa, is, what we're going to be seeing. I just want to see a lot of maybe the companies that are going to be featured there, leaders that are going to be speaking. Hopefully, we see a lot of regulators too in the panel sessions as well. I'm really looking forward to it, and this is something maybe you should put in your calendar, plan to attend, or push your company to take you, buy a ticket and sponsor or partner or something. But we are not promoting Moonshot, by the way, but this is just a very relevant event in Nigeria and Africa's tech ecosystem. Yeah. tech and finance ecosystem anyway. So yeah. So that said, that'll be all today on Across Markets by Business 360. Again, my name is Joy Abia, and it was lovely speaking with you.
Very Ifichukwu.
Okay. Please do not forget to like, share, and subscribe to our YouTube channel. Comment on this video if you found it useful. Leave any comment if there's anything you think that we should be addressing in the next, coming episodes of the show. And please check out This is Business 360 for all updates on every sector you may be thinking about: fair finance, tech, real estate, economy, business, and all the likes. Again, this is Across Markets. Thanks for watching.